Hello traders, Gary Wagner here, just after 9 o'clock in Honolulu, 3 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, the 11th day of September 2015, and this is the Daily Report, our weekend review. Aside from palladium, we do have the precious metals complex trading moderately lower today. To gold, as you can see, currently trading at around 11.05, putting it off about $5 on the day. Now, it has dipped below 1100 per ounce, 1198.96. That's our low, with a high of 1112. Interesting end to a dynamic week, which continues our basic downtrend that we have seen in gold. We're looking at a weekly chart, and we can see that now for the third consecutive week, we've got an overall characteristic of looking at this recent run with a series of lower highs as well as lower lows. But what I find even more interesting is where it appears as though we are going to see gold close for the week. And to best illustrate that, I've created a very, very quick fib retracement from 1073 to the top of this rally, call it 1168, so roughly a 100-point move. Now, on a typical bull rally and correction, subsequent correction, you would see this market rally to whatever high you get, and then the correction should be a maximum of really 61% in terms of the retracement, which is why I've really pegged this 1109 as such a critical area. Now, the fact that we are currently trading anywhere between 1105 and 1107 to me is indicative of a fact that, well, we've got lower lows, we know that, but we're probably going to take a test at minimum of 1097. We came very, very close to it today. Take a look at this low before finding any kind of support. And the key is that once you break below a 68% retracement, it's very difficult to look at these most recent moves in any kind of a bullish model. It fits within a bear model, obviously, because if we take a look at the recent activity longer term than this, what we are seeing, as we pointed out over the last couple of days, and we'll just need to compress this a little bit to see that, but a series of lower highs and lower lows, lower highs and lower lows. That being said, we could easily see this market break below these lows. I think personally we'll come and test these lows at around 1170 and probably trend a little bit lower. Now, of course, with a weekly chart, obviously we are still looking at a micro view. It's an intermediate view nonetheless. It's weekly, but it's a micro view because when we really stand back or look at the big picture, and to do that, I pulled up this monthly chart. The same case can be really said for this larger view in here. Now, simply put, we've got a monthly chart, one grand Fibonacci retracement, which starts from the beginning of this rally, 2008, up to the historical and record top, and really only one area, as far as I'm concerned, of any kind of real concern, and that's at 61% retracement. Because just as we talked about on our intermediate view of the market, you could still make a case for a bullish model even with this tremendous decline in gold if the model were as follows. We had the market move from 700 to 1900. It comes and corrects to a 61% retracement and then bounces off and moves to a higher high. However, when we see this market break below that price point, and on this monthly chart, you can see that now for the third consecutive month, we have had this market close under this critical area. It really doesn't bode well for any kind of bullish model out there, and we could see a further decline in terms of where we have to look at our historical data. This is a rally that took the market to approximately, I think, about 1050, somewhere in that area, but call it $1,000 per ounce because that's this marker here. But we could easily see gold then go and test the $1,000 price point once again. This is the historical data that would provide at least some semblance of support on a technical basis, but nonetheless, both real long term, as in the case of this monthly chart, as well as intermediate term in the case of this weekly chart, are all alluding to lower pricing ahead in gold. So lastly, in terms of technical studies that I do want to take a look at today, I draw your attention to the chart that I've just put up. It is a daily chart, so we're going a little bit more short term on this. In this daily chart, we've got a couple of retracement areas, and those areas really line up with what we just spoke about, specifically the 1109. That is a harmonics, because you can see from these two different levels, we come up with that same price point. The other thing is take a look at momentum on the moving average, convergence, divergence. There is no doubt that these two moving averages are moving apart. So we've got divergence here. They're not coming together. And so that also tells us that the momentum is to the downside and the strength of the downside move is growing. And then lastly, I've simply converted our candlestick chart now into a Japanese average chart. And what we can derive when we take a look at this data is that we have absolutely the necessary criteria that tells us the strength, the trend, the downside trend is not only in play, but it's absolutely maintaining or holding the strength. And the way we look at that is simply, look, there is absolutely no upper wicks over this last week. All the upper wicks are telling us that it traded at or above the midpoint of the prior day. And the fact that you have none of this means that it opened and at all points during the trading day was never able to even challenge the midpoint of the prior day. The lower tails are not something we're concerned with on a market moving down, and candle size is very, very strong. We are looking for a place to position ourselves on the short side. I do think this market is headed lower. What held me back this week was to see whether or not this market would find some support at this, call it 1109 area, and whether we were going to see something like this. Our rally, our subsequent correction, then a small bounce with a lower high. That would be the key thing that we would look for on this kind of play, and then at this point right here, initiate a short position looking for a lower low. However, we absolutely didn't get that. We only, out of this entire week, were able to see the market have one upside day. That was yesterday. And so we'll have to look for a position in the market that is as appropriate as possible, meaning the best possible price for where we believe the market is going, and initiate that next week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.